Hey everyone, Mo is here from Wall Street for Main Street, and today's guest, a returning guest, David Morgan, the editor of the Morgan Report. David, thank you for joining us again.
Well, thank you, Mo. It's good to be with you. It's been a while.
Yeah, it has been a while. I think last time we talked was before the election in the fall, and ever since then it's been a very intense and interesting time we're living in.
Yes, I would agree. It's been that way for some time in my view, and it's only intensifying, I think.
I mean, who would have thought that we have a celebrity as a president? Well, not a celebrity like an actor, but, you know, someone that had his own TV show, a reality TV show.
Well, it goes back, really, to Ronald Reagan. I'm that old, and, Reagan used to do, and I forget the name of the show. I lived in California at the time, and he did, I think it was a Western show, and he's kind of a commentator. And, I remember watching it as a kid, and, of course, never dreaming that would be, he's an actor, and that would be a guy running for president. And, but it's where we're in. The idea when you're young, I don't know if they teach us anymore. In fact, it's probably pretty doubtful. But, I was in early school years, grade school, 1 through 6. I remember in 4th, 5th, 6th grade, somewhere in that range. I gave you the idea anybody could be president of the United States, And of course, right. That's far from true, but just about any actor could become president of the United States.
Did Reagan, did he hold a political office before he became president?
I'm vague on that. I don't want to misstate it, and I'm sure that the commentators will nail me if I'm wrong, but I somewhat remember that he had some, he had held some other office, I'm almost certain.
Okay. So it's not like Trump, who had no political experience. So Reagan had some kind of experience.
I think so. I'm sure one of the commenters will let us know exactly. And, you got to forgive me. I just got back from another trip, and my memory isn't as great as it could be probably at my age, plus, jet lag, et cetera. And I'm also writing the final parts of the Morgan Report to go up, to be posted up this weekend.
Right. So let's start off the podcast by talking about your niche, your expertise, which is the gold and silver industry. So lately, gold and silver had been on a tear. Silver is above $18, and right now gold is about $1,200. But yet, if you notice, and if you look at the gold and silver stocks, it hasn't been following the uptrend that gold and silver, the commodity, has been. What do you think is the cause of that divergence?
Well, you're hitting me with a question. I just did an update for our members of the website. And I got probably 3, 4, 5, more than 4, probably 5 or 6 questions that basically you nailed. It was stated in different ways, but that was it. First of all, it's obvious. What's the obvious? The divergence. Secondly, in a bull market, the shares usually lead. So if that's true, then the shares are indicating we're going to see a retraction in the metals prices.
Because I was expecting the gold and silver prices to follow suit, and I was watching some of my stock I have in my portfolio, and it was going the other way. And I was reading articles, and a lot of people were speculating that the gold and silver stocks were being manipulated down by the gold cartel. So I want to get your thoughts on that.
Well, the manipulation thing, Chris and I addressed the silver manipulation, meaning the commodity or the money, in the book, The Silver Manifesto, as you well know, and went through a great deal of analysis, some of it based on Gatta's early work, and then, of course, adding on substantially more, in fact, going much, drilling down even deeper, and then using the Sharpe's ratio, which you can look up on Google, and explaining that it's impossible to have this manner of trading on a random walk. It has to be a manipulation. So, we pretty much nailed that one. Of course, we've been vindicated along with some others, with Deutsche Bank admitting that they manipulated the silver market, and also brought forth other banks that were, alongside them in the manipulation. As far as the stocks are concerned, certainly, the bottom line, Mo, as you know, is just about everything out there is manipulated. I mean, I gave a speech a few years ago at the Vancouver Resource Investment Conference, and I was speaking on the main stage on that particular event, and I was talking about manipulation. And what I did was I noted that if you manipulate interest rates, and this is another chapter in the Silver Manifesto talking about economics, we have about 3 chapters on that, and we talk about the importance of interest rates in a free market. And if you manipulate the number one most important thing around the banking sector and the debt markets, which is interest rates, if you manipulate that, you basically manipulated everything. You really have, because everything starts from the definition of money. I put that in quotation marks because I believe, as Mike Maloney states, money's gold and silver. But if we talk about money in the electronic form, once it is in that form, you have to put an interest rate on it, and depending on the interventions into the market, which have been massive for a very, very long time, you basically have controlled everything. And that's the essence of it. So coming back to the point, how are these stocks being manipulated down at the present time? The answer is I don't really know. What I do know is they are doing what they're doing. I always try to take an objective viewpoint. I've often said on many interviews that, the price of silver, regardless of how it got there, is, thus and so. I do think that there is probably some anticipation of what I said, very succinctly, that the stocks lead, which indicates one of two things, basically. One is that you're going to see a pullback in the price of the metals themselves. And the other could be a forewarning of a stock market pullback of substance enough where even the mining shares will be sold off as well. So, with the debt markets coming to a head, with the Ides of March fastly approaching and being the date where the debt rollover is due, we might see a sell-off in the stock market.
And I'm sure you heard of this, but the CEO for First Majestic Silver, Keith Neumeyers, spoke out against the manipulation in the gold and silver market, which is something that not many CEOs are willing to come out and talk about. I guess they're afraid that they might lose the relationship that they have with the stakeholders, or investors, or the bank. So I guess they keep quiet on that. I don't know what your thoughts on that. Do you think other CEOs of major producers will start coming out and speaking out against the manipulation, or maybe doing a lawsuit or anything of that sort of thing?
Well, I think Keith's a bit of a maverick, and I admire that. And we've had private discussions around that issue a few times. First of all, to reiterate what you said, Mo, I think first of all, there's some that just don't buy into it at all. I mean, Ross Beatty, forget it. Ross doesn't believe it. Now that Deutsche Bank has, admitted it, I haven't had a conversation with Ross, and I don't get to speak to him directly that often, although he's very open and friendly with me. He always has been. But so first of all, I think most of the larger producing companies, or mid-tier even producing companies, are not going to jeopardize the relationship with the bank. Because believe it or not, and I mean, people who are deep in the sector, such as myself and you and many of your listeners, know that there is a required almost banking relationship for the company. So they aren't going to bite the hand that feeds them. So they're going to keep their mouth shut, even if they believe or know, or, now again with the facts in front of them that they can't ignore, they're still going to keep their mouth shut. So I think that's number one. Number two is that, what does it do? And the answer is not a lot of good comes from it. I mean, some of the shareholders and stakeholders will be happy that someone else is taking a stand, but I think most people are neutral or complicit in it. So is it an overall benefit or not remains to be determined. As far as I'm concerned, personally, no, I think it's great. I mean, again, Chris and I spent a great deal of time on that one chapter on the silver manipulation. I mean, it would be our effort to be able to prove to a grand jury inquiry, is the price manipulated? I mean, take that in, read it to them, study it and present it. But, as far as, what good does it do? I mean, I'm going to ask a rhetorical question. I mean, what good has it done? I mean, basically, Deutsche Bank has admitted it, and really nothing's changed.
Yeah, did you read the transcript from the traders when they were talking to each other, and they were while they were making these big trades and manipulating the market are all having a good time and laughing off about it.
Yes, but not in its entirety. I mean, I was starting to get, I would say angry is the right word, but I was getting emotional about it.
Right.
And, to be vindicated after so long, felt good, but it was a bittersweet good. I, don't want to talk about emotions too much, but, the amount of flack that people in the industry, such as myself, have taken over the conspiracy theory aspect of this, and all these people seem to know more than I do, and certainly I'm not a know-it-all, believe me. But
right.
Nonetheless, the amount of work that we do to prove it still gets ignored and overlooked, and of course labeled with that, those two easy words that makes you an instant expert on everything, conspiracy theorist. So it's been a bit of a ride, and we've ridden it this far. And again, I asked the question, it's great, so we're vindicated, but what good has it done? The answer is not much yet. I mean, I'm still somewhat hopeful, but I think the system is so corrupted, even on the legal side, that, it's just, it's a minor fine to these people. And so they pay some ridiculous fine that they can print up on their own practically. And life goes on. And it's unfortunate because, if the rule of law really was significant, which means that, everyone's equal under law, and someone breaks the law to that degree, someone has to pay the price. If that were the case, then it might be a different story. But unfortunately, in today's world, we're living in the Orwellian world where all animals, or Animal Farm, or either one, take your pick, but all animals are created equal. Some are more equal than others, and you have the too big to fail, too big to jail crowd, and then you've got everybody else.
Yeah, I definitely would like to see other CEOs come out and speak out against the manipulation that's going on in the market. And maybe do a class action lawsuit just to send a message, not just to say we lost all this money because of manipulation, because a lot of these companies mismanage their assets and their minds, so a lot of them deserve to go under, so to speak. So we'll see what happens. And yeah, you're right. This is conspiracy theory that's been going on for a long time, and thanks to the internet and to a lot of people that were persistent about it, it's starting to come to light that this market is manipulated, just like any other market in the economy and finance. So let's shift gears here and talk about the gold and silver market and the current state. And I've been looking at the balance sheet for a lot of these gold and silver mining stock. Well, for the silver mining stock, I see a lot of them that need the price of silver to be at least $20 for them to make any money. And right now we're at 18, so I think a lot of them are not quite there yet where they can get out of the negative territories. But I want to get your thought on the margin and the financial state of the gold and silver stock. Has it improved since last year when gold and silver started to go back up a little bit?
Well, I guess it's improved somewhat. I mean, based on the price, we know that. But,
right.
I want to add on to what you just said. I mean, basically the margins in the silver market, and the gold market for that matter, are not sufficient enough to make a robust, profitable company in many, many instances. I mean, basically in a good business, you have a decent margin, and you have a cash cushion of some type because things happen in life and things happen in business. But if you look at something that Steve St. Angelo did recently, he talked about how the price of the precious metals is basically floats around the lowest cost producers, cost of production, which is really interesting. I read that article a couple times because I thought he did a really good job on it. And it spurred some more thinking on my part that isn't it interesting that when you get silver or gold at a price that's sufficient for a pretty wide margin where you could, be assured of a profitable company, and not all companies would be profitable even at higher prices, but you'd have, cash building in the account, you might be able to pay dividends, and, definitely have a cushion and maybe be able to expand. I mean, basically anything that good ongoing concern would have. And yet, that's not the case for these miners often, or not even most of the time. I mean, usually what happens is what we've already seen. You'll get this big parabolic rise where you see, very wide margins for, the best, most efficient producers that lasts for a matter of months, perhaps, with a great deal of hedging going on. And then you see the price come down, significantly. And this is what we've seen again. And it doesn't necessarily have to be that way. The problem is, again, that there's so much leverage in the system. Gold and silver are treated as commodities, not as money. The commodity cycle is not just, it can be the base metals as well. I mean, the commodity cycle in the metals is basically a cyclical business, and many are, I understand that. But you get these mass overshoots, more so than in other industries, and especially silver. I mean, I tip my hat to Ted Butler. I mean, Ted's probably led the charge more than anyone else, yours truly included, to point out that, there's a lot of discrepancies in the commodity sector overall, but nothing compares to how much silver is out of whack, which means, how many days of production are sold forward in the forwards market, or how many, months of production are hedged out in the futures market, and this type of thing. I mean, silver just stands all alone as far as the amount of paper amounts versus the physical market itself. It's just astronomical compared to most other commodities. I mean, he uses oil often as an example, but and I don't remember the numbers exactly, but the point being that silver far and away has much more paper backing than any other commodity on the board.
Yeah, ever since we had the correction in 2012, a lot of the producers had been cutting the fat and putting their mine in maintenance mode and just trying to cut down on their production costs as low as possible. But even if you do all that, because the mining industry is pretty much a dinosaur industry, there's not much technological innovation that goes on in that industry to try to make things a little bit more efficient and to save production costs. So there's only so much you could cut before you completely shut everything down. So yeah, we see that, but you can see the production costs are still pretty, for the silver stock, I'm seeing, like, as I mentioned, around at least $20, and then for the gold companies, I'm seeing something around like 12 to 1400, so depending on what company you're looking at. So it just tells you that this industry is just because of the lack of innovation, there's only so much you can cut down.
Yeah, again, I'd like to add that, number one, we had most silver producers around 22, and then, we had to revise it down because, there's a big drop in oil prices, which basically was helpful to the mining industry. But if oil prices start to go back up, these marginal companies at 20 will be marginal at 22 or 24 or whatever. As far as the innovations are concerned, I agree, but one of the biggest mistakes made by my predecessor, Jerome Smith, who wrote Silver Profits in the 70s, that got the Hunts interested in the silver market, at least purportedly so. And then he wrote Silver Profits in the 80s, and the coming currency collapse, he wrote several books, and many of them were big sellers in the hard money camp. But he had overlooked cyanide heap leaching as a big innovation, and he missed that whole technological change in the mining in the sector, which made him look rather foolish looking with 20/20 hindsight based on his predictions, because he was a pretty smart guy and he did good analytical work. And to see that he had these massive numbers on the price of silver were based on something that was based on the current data, but not seeing the future. And when the future took place, he didn't account for it. And so there is a new reagent that I'm quite excited about. It's actually a spin-out proposition on one of our speculative stocks in the Morgan Report, and the company doesn't even have, it has a name, but it may be changed. I mean, it hasn't even been voted upon right now.
Okay.
So I've been, kind of pushing it out there, trying to get, more paid subscribers, and at the same time, the paradox of a real free market where we could be somewhat self-serving, trying to keep the Morgan Report alive, because it's certainly not where it once was as far as the amount of paid members, and also serve others at the same time and give them an opportunity that does not come along very often. I mean, this thing that happened with the cyanide heap leaching as a technological change was about the mid-'80s. So here we are in 2017. So what's that, 30, 40 years, and we're sitting with a potential that may be as significant. I don't know. It's forward-looking statement, so take that as it may. But it's an opportunity, and I think it's a pretty good opportunity. So I don't want to talk over you, Mo. I think you're probably aware of it now we talked, and I know that doing an interview with you is a little different than doing an interview with a lot of people that ask me to, because I know you and Chris are very close, and I know you're numbers guys, and I know you talk numbers, and I know you probably use the same type of spreadsheets that we work with when we do our analytical work. But regardless, I just want to throw that out there, because it is something that could, I won't say would, but could be significant going down the road. But these things take time. I went and took a personal trip on my money, obviously, to vet it one final time before we decided to really start to give it some, put the information out there to our mailing list.
I get this is why I like the royalty and streaming company, because the production cost is really low, and they're making money despite the prices being low. And you have your own royalty streaming company, although it's small compared to other companies. And I just want to get your thought on the type of deal that are being presented to you, because I was reading an article from about Randy Smallwood. He's the CEO of Civil Wheaton, and he said there's a lot of risky project out there that's getting a lot of capital when he thinks they're not very attractive. So I just want to get your thoughts on this state of the capital market for gold and silver companies.
Right. Well, first of all, as you know, through the attorneys, I'm pretty much handcuffed, as a metaphor, to saying too much in the U.S. It's a Canadian-based company, but I think I could talk, in generalities and not get anyone in trouble. So first of all, it's Lemuria Royalties. If you're interested in it, you can go to the website, lemuriaroyalties.com, and you can see, who's on the board of directors and what the mission statement of the company is and what our capital raises have been.
Are you taking investors, or you're not?
We're not closed down entirely. We kind of do them in tranches, and right now we're kind of cooled off for a while.
Okay.
But we may open it up again later. But as far as what you said, or what Randy said, totally agree. We have seen many situations that were valued and paid for at prices that we wouldn't pay. I mean, first of all, we have a fiduciary responsibility to people that are shareholders to, benefit them, which means we've got to have, an IRR, an internal rate of return, which is sufficient to the risk. And we have a number, and I won't give it, but we have a number that is well within the metrics of the industry. And we have seen situations that were much, much less than that, or perhaps even negative, which was just, betting that the price is going to go much higher, that type of thing. Well, I don't want to make bets. We want to make investments. And because of that, some deals that we wouldn't touch were completed with other entities. So long way of saying, though, absolutely, totally, completely agree with Randy. And, Randy is someone that, not only do I know, but some of the other people that are in Lemuria Royalties know as well, and have had that same conversation one-on-one with him.
Nolan Watson, who's the CEO of Sandstorm Gold, he did an interview on Kitco last week. I don't know if you saw it, and he was saying that a lot of these mining companies are being misleading about their asset, or not presenting the whole picture when they, come and talk to him and his company about the asset that they have. Do you agree with him on that assessment? That there's a lot of companies out there.
In a general way, let me just state that whenever there is a proposal made, then there is a bunch of due diligence. And so in most cases, both parties present their best case, and that could be construed to be one or the something or something else. I'm not going to comment on that. What I will say is that it begins the process, and in the process, what you find is, first of all, you have to have good analytical work, and we have two very, very good that have done this type of stuff again and again and again for major concerns. Right. So that's number one. Number two is you got to have a QP that's really worth their salt, which means you have to, a qualified person that's a geologist that can go in and absolutely guarantee, more or less, as much in the human realm as you can, that what's there is, what everyone has said, says is there. So there is a lot to it. It's, the mining business is a tough business, as we all know. And so in the royalty or streaming business, you better be darn sure, especially when you're at the size we are, or any size. I mean, the principles all apply across the board from small to large. But no, there's, I don't know why, honestly, Mo, that there's been these transactions that have taken place in a low-cost environment other than, people that have made them have kind of bet on a higher metals price, which, of course, I believe is to take place, but I'm not going to invest based on that. Again, I said that twice, but that's it. So, we could have made some deals, and they would have been a disservice to myself and the board and everyone else that's invested with us, and I just simply won't do it. I mean, I'd rather go I won't comment further. I got to be a little bit careful what I say, but we're working hard to do something that's beneficial, and sometimes patience will pay off, and that's the way I am, and the board as well.
I'm just wondering what he meant exactly when he said that in the video interview. Then he also said that the 43-101 is not really good enough in giving people a good assessment on their asset. So just leaves me wondering: do we have a bunch of BRIEX out there in the market, just misleading investors?
Well, as you know, Mo, the 43-101, the national instrument 43-101, yep, was implemented after the BRIEX fiasco. So the government came in and said, we're going to manage this, and we're not going to let another BRIEX happen. So they came up with this national instrument, and it has to comply with these things. You have to have a QP, it's something I just mentioned a while ago, a qualified person, which is more than just a geologist. They are, but I mean, they're at a higher level and, at least perceived to be. And this person basically puts their name on the line and signs and says, that this has an asset, such and such. However, does it mean anything? And the answer is yes and no. What I'm trying to say is legislation is legislation. You can legislate that everyone has to be honest. But just because you have the legislation on the books doesn't make everyone honest. There's still people that are not, yep, or entities or whatever. So you cannot get outside of the fallibility of the human realm, regardless of what the law says, because people break the law all the time. So just because you have something that's going to make it better, it doesn't necessarily mean that it will. That's probably the best way I can surmise it.
Right. I've seen mining companies understate their capital expenditure for a mine or project, but I mean, I think that's the norm in the industry, because there's always going to be cost overrun anytime you try to get a mine in production. So maybe that's what he meant. I don't know. But it's interesting that he
that could be it. Yeah, and another thing that's one of my pet peeves, as you know, and how you're a finance guy like me. I mean, this cash cost is just a ridiculous, insane statement, but people don't know that, and they hear these words, cash cost. Oh, the cash cost of our silver is $2 an ounce. Oh my God, they're making $60 an ounce. Cash cost is absolutely, totally, completely, 100% meaningless. But unless you're in the industry, you have no idea. If you're a retail investor, and here you have a low cash cost. Right. People naturally, and that's done, in my view, deliberately. This is, it's sort of like what goes along with silver market. I'm sorry I'm digressing, but, it's a junk bag or scrap silver. These are very derogatory words that give you the idea that silver is not really that valuable when actually it is. So sorry for the digression, but nonetheless, the cash cost is an absolute meaningless thing. I wish they'd take it out. I mean, even the all-in sustaining cost, a lot of times that are produced by these companies don't include taxes. Well, that's good if you've got a tax situation where you can have carryovers for a number of years, and it looks good for 3, 4, 5 years even. But someday the piper has to be paid, I would presume. And so, that's part of the equation, but a lot of companies just leave that out as well, even though they do an accurate AISC. They don't do a complete AISC, if you know what I mean.
Did you happen to catch that movie Gold? It was based on the Pre-X scandal.
Oh, absolutely. I enjoyed it. It was a bit bittersweet as far as, looking at it from the perspective of business and also the human realm. I don't know how accurate it was. I was around those days. In fact, VX was on one of the buy lists that I was saw on a newsletter that I was subscribing to, and then it fell off the list pretty early. I never got into it. But what a story, what a ride. And in the movie, I don't know, again, how accurate it was. I mean, McConaughey's character, whether the guy was really that naive and didn't know what was really going on or not, I don't know. I have no idea, really. It's hard to believe, though, that someone at that level wouldn't know eventually that the doggone mine had been salted. And, what a story. I enjoyed the movie, but, walked out of the theaters pretty disheartened. And it gave the gold industry, a bad name. And, and it happens in other industries. It's not gold, but there's so much emotion around gold because gold represents money, and money in a true sense. And money transcends everything for everyone, everywhere, all the time. People don't think of it in those terms, but it does, because money transcends religion, it transcends geography, it transcends national origin, it transcends sexual orientation, it transcends everything, because everyone is concerned about their money, if they have a little or they have a lot. People that have a lot are worried about losing it. People that don't have enough are how they're going to get more, how they're going to get that next dollar. So it's really a very, very, very important issue that everyone, I would say, obsesses about, but certainly gives a great deal of time and energy toward.
So let's talk about the market and economy in general. So today we record this podcast. The S&P 500 was up 32 points. Dow Jones was up 300 points. Do you think this is all because of Trump's economic nationalist agenda? Do you think Wall Street is buying into that?
Well, when you ask me why, I mean, to repeat, what Cliff High has to say from time to time, it gets into intent. And do I know what the intent is? And the answer is I don't, but I'm going to give you the answer. I think that we are in what's called the markup phase. When you look at how these markets are constructed, you'll see that there is an accumulation phase, a markup, a distribution phase, and then a takedown. And there's subtleties that occur within those. Within the distribution phase, what you basically do is you have a lot of stock or commodity, for example, and you distribute it from strong hands to weak hands. But you can't do it quickly, because if you do, you drive the price down. As we all know, or should know by now, if you have a great deal of stock and you dump it all in the markets or a market order only, so whatever the market will bear, you're gonna crush the price. I mean, this is what happens in the silver market from time to time. It's like silver is moving along just fine, and all of a sudden someone wants to sell 800 million ounces in a couple of mouse clicks. Well, what's going to happen? The price is going to crash. Same thing in any market. So the point is that you distribute it over time, still a little bit over days, weeks, months, and sometimes in a big market like the S&P, years. So then what happens is there is another markup, because what you've done is you distributed your stock, and now you want it to go higher because of two things. You want everybody that you offered your stock to feel good. Oh my, I'm so happy I bought here. I knew the market was going to go higher, and it goes higher. But it also gives the smart money the opportunity to go short at the same time. So you'd have the distribution level, you have the markup, and then you have the takedown. Now, since these are massive markets, or massive quantities of quote-unquote money, it doesn't mean it happens like the next day. So is it attributable to Trump? Could be. Is it attributable to the strong hands to the weak hands? I think that's more likely.
So, well, by the way, Ronald Reagan did have have political office experience before he became president. He was the governor for California.
Yeah, I was going to say that.
Yeah.
Makes me look kind of stupid, but I thought he was, but I forgot if I say it I'm wrong, then I'm really in trouble. Thank you for that. I'm sorry. I am.
All right. I mean, I'm not much of a historian when it comes to politicians because I think all politicians are slimy and corrupt. I don't want to read up on them. So
well,
I just
it shows you how much I pay attention to them as well. Sorry, Mo. Go ahead.
No, it's okay. So I was just saying that this is the first time we ever have someone like Trump who never had experience in politics to come into the White House. And he's really disrupting things in many ways, and I think the deep state or the establishment is doing everything they can to try to discredit him. I'm not a Trump fan, by the way. I mean, I don't like the guy. He had many flaws that I just don't like about him. I just don't like his rhetoric either. I don't like his policies, most of it. Although some of the stuff he said in the State of the Union, I agree with a lot of what he said. But there was stuff that he said I didn't agree with. So anyway, I think we're in an interesting time in the economy and market. Do you think the establishment or like the Federal Reserve will try to raise rates in effort to try to collapse the market to make Trump look bad? That's something that I've been thrown out there a lot by people in the alternative media.
Well, certainly a possibility. I mean, it's hard to get a real handle on Trump because he's pretty volatile.
Yes.
Secondly, there's this contingency in the alternative media that thinks he's the real deal, that he's really going after the deep state. I have a different view, but I don't know. I really don't. I think that it's part of the pendulum swinging in both directions. I mean, if you have it going far left, which it has been doing for quite some time, now it's swung the other direction pretty far. And what it does is it gets the division within the country even greater than it was. And that may be the objective. I mean, I don't know. I certainly won't rule that out because that seems to be, an obvious outcome so far. And as far as, what can he or can he not do, I look at the politicians as pretty much a middle management position. I mean, I just got back, I'm going to digress again to make the point. I just got back from a lecture in Mexico, in Acapulco, and the lecture series is called Anarchapulco. It's some anarchists. Look it up. It doesn't mean you want to burn things. It actually means you want to have a voluntary type of relationship with human beings around you. And very little government, if any. Anyway, the point was that the first session was investments, and that's one, of course, that I participated in. And after day one, it was into a lot of alternatives, a lot of alternative media, Bitcoin, health, you name it, lots of stuff. One of the lecturers during the ensuing days was Foster Gamble of the Thrive Movement. And Foster and I have known each other for some time. Not a great deal of time, a few years, I guess. And I actually had him on my Mastermind series. So I attended his lecture. And in the Thrive movie, he has a pyramid. And he shows, where government fits on the pyramid. And the corporations are above them. And then, the corporate banks. And then the Bank for International Settlements. So basically what he shows is about 3-4 levels above corporation and the banking empire that are above government. And of course, president is a president of a government. So I had forgotten that part of the movie, and he showed it in one of the slides. It just reminded me of my conviction. Doesn't make me right, I suppose, but that seems to be the way the world works. So I'm just bringing that point up, Mo, because it's important, because a lot of people have a misunderstanding of the power that the President of the United States has. Many people, unfortunately, believe it's like the most powerful job you can have in the world, and it's really not even close. I mean, little Grandma Janet Yellen, if she's so inclined to raise interest rates by 5 points tomorrow morning, would certainly crash the markets.
Yeah, I agree. I think being the head of the Federal Reserve is a lot more powerful than being a president of the United States. And I think by design, the president not supposed to have that much power to begin with. And the reason they have a lot of power now is because all the presidents before Trump had continued to expand their powers, and so they just do executive orders now to get anything done. So now Trump is it's like Obama and Bush. He's very authoritarian. He's going to do executive order to try to get things done and bypass Congress, which is something that people should pay attention to and try to get Congress to try to limit the power of the executive branch, because now they're becoming way too powerful.
Yeah, I agree. I mean, it was, we learned in school, you learn on your own. I mean, basically the founding idea was that you had, powers that were spread pretty much evenly between the executive, the judicial, and the legislative branch, and one looked over the other. But that's been so corrupted, as you stated, and unfortunately we're in a situation now that's a far cry from the republic it was founded to be. It's certainly called democracy, although that's really not how it was implemented. But it's not even that anymore. It's more of a situation where the power elite through the corporations run the corporate U.S. through their manipulative legislation that is mostly by these power brokers that run the system.
Yeah, if I have to guess right now, I think we're going to see a lot of volatility in the market coming soon. I can't tell when, because right now it's been going on an uptrend for the past couple of weeks with no pullback. So that usually indicates volatility is about to come in. Would you agree?
Yeah, I do. I mean, you've got the budget situation on the Ides of March, the 15th of March. Beware of the Ides of March. So it could be imminent. It may not be. I don't know. What I do know is that I'm definitely going to look at, shorting the market once it tips its hand. The market's got to prove it to me. I'm not going to tell the market. Once the market shows me it's going to come down, certainly be a shorting opportunity. I think the bond markets have peaked, or the U.S. bond market has peaked finally. And the equity market's very, very overextended, but it's not time to go short yet. I have to see the indicators that I use before I would do it. But nonetheless, interesting times. We've overused the word too much, but you really want to be debt-free if you can. I understand most people can't. You want to live within your means if you can. I understand a lot of people can't do that either. Yeah. But you want to, work on yourself and, try to your best ability to live. Certainly, I think the millennials, and I have two millennial daughters, so I'm somewhat familiar with them and their thinking and, their peer group, but certainly no experts. It's not my generation. Nonetheless, I think they're much more adaptable to the current ebb and flow of the real physical economy than we were.
You think so? The millennials have been getting a lot of bad right now. I think they have a bad reputation right now. So that's the first I've heard from anybody saying that the millennials are more adapted to changing environment.
Well, yeah, we could have the discussion because I certainly could be educated. I mean, I see it like Uber as an example. I mean, some that I've talked to anyway, and that's a very small data size, are like, I don't need to buy a car. I can Uber here, or I can bike or whatever. So that's something that would never have taken place in my generation. I mean, if you didn't have a car, you were nothing. So the idea that you don't have to own a car, I think that's more flexible than it would be during my day, as an example. But, if you have time, we can open the discussion because, they are the next generation and, the youngest, and they have a pretty good population base. So certainly they're going to be facing these problems for a much longer duration than I ever will.
Yeah, definitely. And the economy and the market is evolving as well. So people should definitely pick up new skills even after they're done with schools. Being done with school does not mean you should stop learning, because it's a skill that's going to go away tomorrow. So that definitely should not stop investing in human capital.
Exactly.
Yeah. So, David, thank you for your time. If people want to find out more about your newsletter and your royalty streaming company, where can they go?
Well, the newsletter you can get on our free email list, probably the best way to start, and that's just go to themorganreport.com, give us a first name and email address, and we'll get on board. And then as far as Lemuria, the royalties company, just go to lemuriaroyalties.com, and you can peruse the website there. And we do put out some information. It's rather slow coming because in that realm there's so much that's vetted by the lawyers, and every time they have to vet it, you got to pay them, and that's the way the world works. So, but if you're interested, certainly you can go there and get on our email list. We do put out news occasionally. I mean, a lot is, I feel like I'm in a squirrel cage. Well, that's probably a bit of an exaggeration, but a lot has been going on, but nothing has really happened, meaning, the signing a contract kind of a thing. So, people look for results, and result means you, quote unquote, have made a deal. And we haven't done one for a while, but certainly it hasn't been for lack of effort, me flying all over the place, and the analysts doing a ton of grinding out proposals. But, you got to work hard to get to the finish line, and we're far from it right now.
All right, great. Well, thank you for your time, and come back on again soon.
No, thanks for having me. Appreciate it.
Mo and I are trying to raise $1,000 per month for our Patreon account. We have over 2,600 viewers per YouTube video, so if we can get most of our loyal listeners or all of our loyal listeners to donate $1 per month or up to $5 per month, which would be amazing, that would cover most, if not all, of the money that we need. So we also accept one-time donations. If you go to the wallstreetformainstreet.com website, we accept donations in cash via PayPal. Fiat, you can donate there. You can donate Bitcoin through our Bitcoin wallet there on the website, or you can donate gold and silver. We have a gold money account, and we also accept mailed donations of physical gold and silver. Thank you guys for listening, and we appreciate any and all help. Please forward it to friends. Okay, bye.